What's up, guys? Going to be doing a quick review. Just haven't really covered these too often. It's just going through some of these ICT concepts. I wanted to mark out a few of these technicals for you guys. That way you could understand them a bit better. So we had this all-time high that was created in July. That's right there on the 18th. You can see we traded all the way up, and then we got that massive trade back down. So this is an engulfing candle, right? You call it an engulfing candle because it essentially engulfs all of the previous candle. It took above the high and the low. So literally completely engulfs that candle. Now, when we had that shift, we immediately created this order block here. So right there is a bearish order block. That's pretty uh, simple right there. Now, on the next candles that were created, remember, a high probability order block is always followed by a fair value gap. So you can see right here between these two candles is a fair value gap. Now, this is a little bit more unique than just a typical fair value gap because you also had one here. So it makes this a balanced price range because you had a gap from this candle to this candle. And you also had a gap from this candle to this candle. So that creates a balanced price range between here. Now, price is going to want to come back to this balanced price range. That's why they're important. We always want to see them try to come back. And then we have context. What's the context? We made an all-time high right here and an order block. So which levels should be the most sensitive? Well, we should be looking at the order block, and we should be looking at the mean threshold of the order block. You can use the entire wicks if you wanted. I tend to like using the body. I think it's just a little bit more accurate from what I've seen. Let's see. And so that is our mean threshold. That's a fancy word for 50%. So once we get up into that 50%, that's where we really want to start looking for that sensitivity. So you can see price trades down and extends, right? So we've created a new level of market structure right here. We had these three lows and then they got punched through. Why is that significant? Because if we have a market structure shift, that means that we can measure a fib. So we want to be above 50% typically. That's just your traditional premium and discount. Now, that's great for us. Why? Because everything here, the fair value gap, the order block, the mean thresh was all above 50%. Now, if you're a swing trader, this is what I would recommend. I always go with best case scenario. So I would put a short at the mean thresh and put my stop above that order block. Now, my TP is going to be the recent low. I mean, obviously that previous daily low, but then after that, we start looking at the market structure. Now, obviously, this is going to be your best case scenario entry. So if you weren't looking, if you just walked away and you left it at the mean thresh, you'd have been put in this trade, no problem. Now, if you're a scalper, you can still trade that, but I just want to highlight these other areas as well. So say that you were a swing trader that had a little bit more tolerance for risk. You could go short at the order block, put your stop at the high of the order block, one tick above, and then go to that most recent structure. You're still getting about a 2-to-1, and you're really not doing anything except setting a limit at an order block that's already at an all-time high and has a high probability fair value gap and a balanced price range. That's also now above 50%. You can see right at that 75 level, which is important. Now, I know I'm moving kind of fast, so feel free to rewind the video and go through the parts that you had any questions about. Now, we had these levels, right? And these are our levels drawn out on the daily. So when it comes to anticipation, we know that most of the time, let me get the sessions indicator on there. Most of the time, these levels are going to come from like a Tuesday or a Wednesday, typically is going to be what we expect as far as the high of the week. So you can see right here, Monday, we're flat. And this week we had interest rate on Wednesday. Monday was flat. Tuesday was kind of flat, traded up all the way into this fair value gap and into the order block there, and then rejected. So that was cool. There could have been some scalping opportunities in there. Then here we get another one, trades up on Wednesday now. And now we're expecting something to happen. Why? Because it's an interest rate decision. We trade right up into the mean thresh. And then right here at 1300, it's kind of hard to see, but this candle here, the interest rate drops. We move up right into the mean threshold. And then what happens? Violent reaction. We trade down. Now, I'm going to go ahead and delete this because you know what it looks like. I want you to pay attention to this piece of price action here. So we trade up into that daily mean threshold and reject. Now, inside of this pattern, right? We're now on a 1 hour chart. Inside of this pattern is essentially the exact same pattern that we just looked at on the daily. So remember, we had order block, fair value gap, mean thresh. So now if we go back down to the hour, we have an order block here. It wasn't followed with a fair value gap until here. This is the high of the week. We could frame out the order block. So the low would be down here. If we're framing out, remember, I was telling you, I like just the bodies because it's always going to give me the most accurate representation of what price is doing. So this one got real close, but didn't quite make it. But I want you to see that same pattern is there. And so they reach back up, they fall just short. Maybe we don't take that trade. Maybe we just take it a little more over here, but we still can backpack off of that larger move on the daily if we understand this level. Now, remember, we could also have just gone short right there at the order block. So the same thing for here. If you are more of a day trader and you're just looking to trade for the day or maybe the previous day, you could have gone short right there at the order block, set your stop right there above the high, look at that previous daily low, and you'd have had a 2-to-1. Now, remember, we could look for after the daily low, that weekly low, get a little bit more out of the trade, or you could convert it to a swing trade and hold on to it. So if you would have just set best case scenario right here at the mean threshold, stop at the previous daily low, you wouldn't have gotten triggered in. So that's why it is important to monitor these setups. And once you see a full rejection, because it's the same thing, guys. Like if you go down to the 5-minute, we get essentially a very similar pattern. It goes up, it makes the high of the day. It completely engulf the low, and we get this heavy bearish candle again. We break down and then sell off. But it's essentially just running, creating a high, and then in a hurry to get in the opposite direction. And so we were able to take advantage of that today and just take a short. We actually went short on NASDAQ. I liked the setup there just a little bit better. So like if you were looking here on the daily, we really just had a fair value gap here. And so right there, if we measure out that gap, that's what we're working with. And if we're measuring out this order block, that was the low right there. So this is the bearish order block. And let's see if we drop down to like 15-minute chart. You could see at the interest rate yesterday, we traded right up next to it and then ignored it. We had this large fair value gap, rejected 50% here, started trading down. We took an entry with a very, very small stop. I don't remember exactly what we looked like. 452. Yeah, so we entered right here. I believe we just put our stop above that 15-minute candle right there. We didn't even want to see it come back into this fair value gap, and it just left. Took some partials there and let the rest run to that previous daily low. But that is going to be it. Just wanted to go through a quick review. Haven't covered technicals in a while. Let me know if you have any questions or if you want to see more of this. All right, guys. Peace.